Hello everyone. So as usual on our RIA podcast, we have a very esteemed guest today, Mrs. Priyadarshini Mulye, and she has been practicing for a very long in this segment. We are going to talk about all the things why she started till in the recent scenario of the market collapse, how her financial planning has been helping her clients. So welcome Priyadarshini.
Thank you. Namaste.
Namaste. So basically, we would like to know how you started, what has been your prior journey, and what prompted you basically to venture into this financial planning.
So basically, my educational background is MBA in finance. So once I pursued that typical route of searching for a job and entering into job market, I started working. I then worked with two financial institutions in the same domain like investment planning and financial planning like that. But during my job, I got to know that there is a gap between financial awareness, the way we were understanding about finances and financial planning. So I thought to enroll into a more technical aspect of financial planning to understand more about it. So I enrolled for CFP, Certified Financial Planning. So once I pursued that, it was on my mind for a long time to start something in more ethical and more unbiased way. So before entering into that comfort zone of job structure, I resigned from my job and I then started Artha Plan. But as I said, I wanted it to be more ethical and unbiased. I applied for SEBI registration. So I got the registration as SEBI-Registered Investment Advisor, and then I started practicing. So I started Artha Plan in 2019, and since then I'm offering comprehensive financial planning services on fee-only basis. So which means there is no any commission-based practice at my end. Proper comprehensive financial planning, I accept that fee model from my clients. So this is going like this now.
It's a fabulous journey, but I think you touched upon many words which our audiences might not know. Because as you rightly said, the financial awareness itself is at a, I would say 23% as per statistics,
Yes.
but it might be much lower also, because people who think that they have a financial awareness many a times are either overconfident or they mean something else and they associate that with the financial awareness.
Yes.
But I think especially this is very interesting when you say that fee only financial advice. So if you can just double click on that and explain us that what typically is the industry and how this, especially the category, is different than that.
So I would say fee only way of practicing financial planning or offering financial planning services on fee only basis is like easy to understand and more transparent way, you can say, about offering these services. Why? Because irrespective of the size of the portfolio, irrespective of the age and income group, the fees are the same for all clients basically. And as I said, there is no any commission based practice at my end, which means that there is a strong trust factor that client generates once he interact, and he's more transparent and free to share his own financial journeys and his own concerns about financial planning way ahead, and then accordingly I plan and I then deliver their financial plan to them. So there is a trust factor, there is more transparency, I can say, in this whole process.
So as you said, I think the unbiasedness that you bring into the table is
Yes.
extremely valuable, because in the industry that hasn't been a prevalent practice, or it has not reached to the masses. I
Yes.
think where it is absolutely necessary.
Yes.
And in that, the lack of personalization affects someone, because nobody is paying attention to, as you rightly said, to the customer's core need.
Exactly.
Rather than it is more about products,
Yeah.
rather than more it is about ki ye le lo, this you have to buy, this is good for you, or maybe people keep switching because somebody, there is a larger some interest, whether it is commissions or some different interest.
Yes.
But I think this, as you rightly mentioned, that the financial awareness among the populace has been also one of the key parameters, I think,
Yes.
for this kind of a situation to arrive in India. And in that, with this kind of experience that you have, what are some typical things that you would like to address, or you have seen, especially in your customers who came to you, and they might have some different understanding of those typical scenarios, whether we talk about asset allocations, whether we talk about different types of assets or equities and all of those things. So what has been your experience?
Basically, there are many biases amongst investors in general, or people in general, we can say. Uh, it starts from a basic understanding of investment options. So, what they write or what they read, uh, they think that they are reading right information, but that's a data. That's not the knowledge that they are getting. And just because one product or one option is giving good returns, they go behind that product. They choose that option without giving much, thought about it, and then they choose and then they invest accordingly. And one fine day they understand that that option is not suitable for them. So that cross checking or getting that knowledge in a proper way, there is a gap. Also, I would like to say, when it comes to financial awareness, people are hesitant about getting knowledge from different sources. Means today we are very fortunate that internet is available. It is loaded with a lot of information. We have podcasts, we have blogs to read, we have newspapers in our mobile phone, we have apps to read newspapers accordingly.
Yeah.
But they are not paying that much attention, and they're just going behind returns, and without getting that solid foundation of the knowledge, they are entering into investment market. So first we need to understand that we all are different, we all have different needs and goals, we have our own risk appetite, and accordingly we need to gain that knowledge, and then we should start investing. Then money management will be simpler.
Yes. No, absolutely. I think as you touched upon, as an investor, I also sometimes feel that because of this much of information available, as you rightly said, we mistake it as a knowledge. Many a times, I have also seen that because of internet, there are so many views. Some are right, some are wrong, and unfortunately, as an investor, I don't know which one to take,
Exactly.
and that also creates many a times either a decision fatigue or sometimes FOMO kind of a category. And typically, investors are bifurcated in both. Some people will say, no, no, I don't want to invest only.
Exactly.
They will keep with the traditional mindset that I will go for savings and FD. But some will say, no, 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 because my friend has told me for this stock and they will go for that.
So we should not follow anyone blindly. We should first understand where we stand today, what are our income patterns, what is our real income, what we wish to achieve in life, what are our goals, and what is my exact knowledge level. And from that, I need to choose my investment option or my way of financial planning rather than following anyone blindly.
No, absolutely right. I think you touched upon the next question that I had. Because we are saying that there is a problem, I think, but looks like that Artha Fin plan and the fee only financial advisory, which is again governed by SEBI, so that's why it is unbiased, hyper personalized, can be that solution for the individuals out there.
Yes.
So, if you can explain us how you navigate, how you, as an investor, how do I see this journey? What are the steps that I go through, and why and how typically it benefits me, and what are the outcomes that I will see at the end of this journey?
Okay, so the process is very comprehensive, dynamic, and very personalized, definitely, because every person who approaches for the financial planning process comes with own data in terms of quantitative numbers, and then they all have different qualities or qualitative aspects, I can say, because there is a human behind money, and I strongly emphasize on the fact that numbers speak their own language, but there is a human behind those numbers who has its own mindset, own perspective to look at his own goals. So when it starts from data gathering first, so quantitative data in terms of numbers like cash flows, incomes, and assets, liabilities, investments made, future goals, typical the data gathering in quantitative way. And I also equally give importance to qualitative aspects through meetings and discussions. And once I gather those inputs, then the process starts at my end.
Okay.
So first understanding their existing elements, screening them, analyzing them, giving them suitable alternatives if some options, investment options or liabilities, wherever there is a need to alter them, I alter them with suitable alternatives. Then comes their goal-based planning. So investment planning and goal-based planning go hand in hand. But while planning for their investments also, I emphasize on the investment options which are suitable for them, their financial planning going ahead, and also options which they are comfortable with or they have knowledge about it. If there is a gap between knowledge and understanding, my part comes in, where I make them aware about and make them understand why this option is suitable for them. So that confidence and clarity is must when the person is entering into that investment. Then retirement planning, of course, is a part of financial planning process, and insurance planning is a pillar of one of the pillar of financial plan. So this way the planning guide is made. Then again, so I importance is more about uh, discussions, understanding, and understanding their level of understanding how they are implementing that financial plan, because it is their hard-earned money which I am planning. So that is very important.
No, absolutely. I think, as you rightly said, it is somebody's hard-earned money.
Yes.
And if you can provide that clarity and confidence to those people, then I think what we have seen, especially with some of the customers, is that even it impacts their level of happiness,
Exactly.
level of contentment, and they are able to actually excel into what they are good at. Because you are the person, like a doctor, we always say, who is taking away that problem in the head of money management, because it is one of the critical factors that we all have seen.
And before financial planning, what happens? Every person has his own way of managing his own money. But when financial plan is made, just not because I'm saying something or the plan is written in this particular way, it's their comfort and their clarity which matters a lot, because that brings that required behavioral change at their end, and that way they should be able to manage their money on their own going ahead. They should not be dependent on even the advisor going ahead, because their money they should handle it the way it should be.
Yes.
So that's the qualitative outcome. That should be the qualitative outcome of the financial plan.
Absolutely, I think. But you must be getting some of the families who are coming as a husband and a wife, or I'm very sure now when women are actually getting empowered with lot of money of their own hands, with their own hands. And in that scenario, have you seen, especially for women as well as families, how this particular exercise is elevating their own confidence? Can you share some of the stories that you have seen of transformation? Because in the last 7 years, since you have been practicing, what are those stories where you have seen that transformation happening into their lives?
Two stories I can highlight. First is about woman entrepreneur. Basically, she is a single mother, so she's handling many things on her shoulders, and she's a professional one, and she's into profession basically. And when she approached for financial planning, she had no idea about any investment option or how to manage or how to bifurcate business money and personal money also. So right from that understanding to making a financial plan, to creating a contingency fund, to making sure that she is well insured, and now slowly her journey started towards her goal achievements.
Wow.
So be it her children education, higher education, she is very much confident than before now, due to this whole process, because I'm just filling up the gaps where they are present about
Absolutely.
her understanding about money and her way of practice of managing her own money. So financial plan fills that gap basically when we approach it in more unbiased way and in a personalized way.
Exactly.
Second story is about a person who was heavily into equities before financial planning, because like we all know, after COVID, we saw the market was rising, and investors were really earning good amount of return. But so he was of the understanding that no any other investment option is good enough to make him get him returns that way. But once the financial plan was made, he he got to know that other investment options like other asset classes like debt are also equally important. He started implementing that 2 years back. And one fine day when we recently saw the market fall, at that time I got a call from that person upfront that now I understand why asset allocation is important. So that understanding, he was ready to implement just because he wanted to change his financial scenario. So that awareness about our own money is very important, and financial plan makes that simpler for a person.
No, great. I think, especially for a woman who is a single mother, this is genuinely a empowerment kind of a story where she is able to actually feel that confidence about her child also. So that becomes a very anxiety kind of a situation for someone like that.
Absolutely.
And actually, you touched upon a very important aspect of asset allocation. Absolutely. Because in that, we all feel that I want to put all my eggs into one basket, and hopefully that basket will give me all the returns that are available in the world. But in case of a downfall, you are going to get the most impacted in that scenario. But at the same time, as you touched upon, it typically takes 2 years or 3 years to see the results.
Yes.
This is not like a pill that you can just give and I will feel.
Process.
Yeah, it's a process. So in that, how have you seen or how do you talk to a customer when first time that person or that family is coming to you, and how do you educate them that trust the process, because it is a hard thing, right?
It's a hard thing.
You have to push someone. It's like pushing them towards the exercise. On day one, nobody is going to see the weight loss,
Yeah.
but it has to be a process. How do you make sure that they are aligned with that? They follow that process.
Simple remedy or a simple way of working towards this process is a continuous communication and discussion, because once in a quarter discussion helps basically, because we all are busy in our own routines and clients have their own routines, and when they find that there is a person who is making sure that plan is implemented, or they are on the right track, or they can feel free to ask any simple query or any mad query they have on their mind. So when that communication is simpler, when there is no any gap in between communication, that track is followed and plan gets reviewed every year definitely. So that's a process.
Yeah.
So once the first review is done, they know where were they 1 year before and how they have reached where. So that again creates an impact that they need to follow this process. Yeah. They need to continuously make changes, and that behavioral change comes when they follow this process. So I guess communication is the key.
Absolutely. And I think, as we say about money, for communication also, the compounding makes all the difference.
Yes, yes.
You have to keep doing that for a slightly longer time.
Yes.
And then once you start that hockey stick growth,
yes,
it happens with trust also, I think. Over the long term, you will see that trust also compounding.
Yes.
Although this is fabulous, definitely, there are some concerns with people that how will that help me to get that hyper personalization? What is going to be the peculiar asset classes that you delve with, or will I get returns? Okay. So what is kind of an answer that the financial planning as a process gives me, and how would you suggest to the larger audience that why should they focus on their goals and on their behavioral aspects of money rather than only returns?
Yes. So there is again a misconception that fancy product or fancy kind of options only make them successful financially or give them fantastic returns, but it's not the case. Even simpler options like FD or RD, even post office investments also can help us to achieve our goals. If my goals are defined, I know what my investment tenure is, I know what my risk profiling is, and if that option is really suitable for me and I'm very comfortable to get into that investment options, I should choose that investment option. And that confidence comes with the financial plan.
Absolutely.
And that's why there is a misconception that even simpler products can help us achieve goals if we follow them right.
It looks like you are like a coach, wherein we go hand in hand. As an investor, you are also traveling with them in that journey. Yeah, absolutely. Now I think in the era where we are all techno savvy, we all have seen everything is available on our fingertips.
Yes.
That has been also one of the key areas why everybody started to shift to equities in the post-COVID era, because we were having everything on the mobile phones. So, have you seen the impact of technology, especially in the financial planning arena? And where do you personally see how you want technology to help? And how will that help to you as a financial advisor, as well as how can that help to your consumers or clients to gain that clarity and confidence?
So, as far as our practice is concerned, I guess through technology, communication is very simpler. Through simple Google Meets, we can connect with clients all over the world today. So that is the first or key change or key help that in technology gives us as a practitioner. And another technology or another help that technology gives is simplifying the process for us, basically. So collecting a data, and from client's point of view also, like DigiLocker is a simpler example that I can quote here, because for that data gathering, for that proofs that they have, basically for any kind of registration or things, we have that DigiLocker with us now. So that again, account aggregators which are coming into space slowly. So that helps. Other KYC processes are also made simpler these days. Uh, Many investment options or investments are made easier nowadays, be it mutual funds, be it stock investment, or be it any banking product. So all are in our fingertips now on our mobile, and we can track them easily. So for us as a financial planner also, and for people who are investors in general, technology is helping its way out, and it's a way to go.
Definitely. Now, as a closing remark, maybe what would you suggest for the audience, especially who are just getting their journey started, or someone who is in the middle of their journey, maybe in the 40s, who typically has this anxiety, and all of us have the anxiety about money management, whether this is enough or whether this is too much. Both are anxieties, I think. So, how can they actually not let that anxiety put into their head and follow the rat race? Rather than that, come out of that rat race, look at their goals as very personalized goals, and try to follow those goals rather than chase returns. So, what would you be suggesting to them?
So, this is a very good question. There is a famous quote, enough is a decision, it's not the amount, which fits right into this answer, because we have our aspirations, we have our own wishes, we want to achieve 10 different things, but as a person, we must know where we really want to go. So that thought we need to inculcate in ourselves, that perspective we need to build for ourselves. And when we know what we want to achieve, we can definitely find the way to achieve them. And that goal may not be a materialistic one, but we should feel content after achieving that goal. So that feeling of content or feeling of that feeling is missing these days. That's why people are following that rat race, and numbers are speaking more than the happiness. So financial plan makes us aware about all these things, and we are more confident when we have our own plan in hand. If as a person, if I'm not able to build my own plan or write my own plan, because when we talk about our own money, we become subjective, emotions comes in, biases comes in. So it's always better to have a help and assistance from a planner who can guide and assist in unbiased way. So that help is also available now, but we all need to have financial plan ready, so we will be more constructive in our money management.
No, fabulous. I think, like everybody says, that you should have a family doctor. I think everybody should have a family planner, because along with health, money is also important.
Yes.
And money can basically help you to reach to that happiness, wherein this planner will help you to get, as you mentioned, I think clarity and confidence are the two major words if somebody has to take out from this.
Yes.
Thank you, Priyadarshini. Thanks a lot for doing this. Thank you very much.
Thank you.
Yeah.